into this because we've only been given 30 minutes. The clock hasn't started, so I'm already ahead of the game. What an iconic way to start off Solana events in different cities by being here in Boston. I love that as a Massachusetts native, and then also right here at the MIT Media Lab. This is fantastic, and thank you for joining us. I am going to not do intros. You all have Google, and you have the agenda, so you know who are up here, and you can Google any of the names. But we're going to dive right in and provide, everyone can sort of introduce themselves and provide color on who they are in the context of the question they're answering, because what you're saying is just as important as where you're coming from here. A couple of quick things I was thinking on the way in. So I'm at Arrington Capital's a hedge fund. We have both a liquid trading side and then 250 private venture investments all across Web3. We've been around for 6+ years. So our liquid trading team this morning was giving me some information. Just because we're here at the Solana conference, we're kicking that off. If you look at Binance, which is the largest exchange across spot and perps, if you look at their perp trading volume, you've got Bitcoin, these are recent numbers, Bitcoin at 12 billion, ETH at 5 billion, and Solana at 1 billion. Deribit, the largest exchange for options, BTC at 18 billion, ETH at 4 billion, and Solana at a mere 80 million. But massive, it's catching up. I think a couple of things. One, Bitcoin and ETH, these products have been around for years and years and years. In some cases, such as Deribit, it's months, like 3 months, I think. And if you look at the volatility on Bitcoin and ETH, Solana is about 20%, but the volatility on Bitcoin and ETH has drastically declined over the past 5 years. And with Sol entering at this point that we're seeing, I think the volatility is going to even out very, very quickly. So I think given that, we're going to start broad as we get into this and think about what institutions are looking at with the products that have been available for years, as well as the newer ones like Solana that are coming to the forefront. And so I want to start broad as we cover this. And some of the adoption and these professionals that we have here on the panel and the varying viewpoints that they take in serving institutions across the board. So Ryan, I'm going to have you warm us up here. Ryan's joining us from Fidelity. Since we're here in Boston, I want to give Fidelity a pretty big shout out. They have been buying Bitcoin mining rigs since I think 2014. In 2017, they were allowing employees to buy lunch in the cafeteria with Bitcoin. They were one of the first ones to allow Fidelity customers to actually add Bitcoin to their retirement portfolio. Abigail Johnson has been a force. I believe she's been going to crypto conferences since well before the rest of them and since before it was the cool thing to do. And she's just this silent, I've had the opportunity to meet her once or twice. She's fantastic. And the first time was probably 5 or 6 years ago. And she was the only one. It was a fascinating room of leaders from government institutions and financials, both in the US and beyond. And she was really the only one that spoke up about digital assets. And it was very impactful to see in person. So Ryan, I know you'll be an excellent stand-in for Ms. Johnson today since she was apparently busy. I know Jake probably asked her to come and she couldn't make it. But Ryan, why don't you give us your take on where you're seeing your clients, what they're asking for, and just generally, as you distribute fund products, can you tell us about those and what Fidelity's doing?
Thanks, Kelly, and thanks everyone for having me. Ryan Lessard, digital asset strategist within Fidelity Digital Asset Management, one of 2 commercial businesses at the firm focused on digital assets or crypto as an asset class. And I've been with the firm now for 8 years, about half and half. First 4 were on the traditional side, institutional side, distributing mutual funds, ETFs, the regular TradFi product lineup. And then the last 4 within the digital assets group on the asset management organization, distributing fund products and seeing that evolve over time. And the beauty of this being at Fidelity, right, an almost 80-year-old asset manager headquartered down the street here in Boston, is their journey in digital assets predates me joining as an employee. It started in 2014, thinking about what is Bitcoin at that point in time, what this might mean for financial services, and making sure as a private company that we're ahead of these trends and growing alongside of them. So we've done many things over the years in our incubator group. I'm lucky to be joined by Hadley, who was there at that time building out some of these great organizations that got commercialized today. And we now have an institutional custody business and an asset management business supporting investors at the end of the day. Current clients of Fidelity of all different types, and then I think net new clients to Fidelity as well that are growing alongside this ecosystem and thinking about these two worlds in parallel and trying to work with a company that sees them as that, right? In parallel, in this intersection coming together and supporting you along your investing journey, no matter where that is and how you choose to allocate. So in my role as a strategist, I'm facing off with all sorts of institutions and investors, everything from a high net worth individual to a pension, foundation, endowment, family office, RIA, financial advisor, and everything in between. And we see a really unique basis of these different investment trends and these different timelines of those different types of investors. And of course, how they invest varies just based on operationally how they're set up and who they are as much as anything else. But what they invest in changes too. And I saw that from my first days walking in the door in 2017 when I was on the traditional side of the business, and thinking back to then, as many in the room know, right, that was a bull market at the time of, specifically mainstream top of mind was just Bitcoin for the most part, a little bit of ETH. But we were getting questions, just what is this thing, right? Like they just totally didn't understand it. And I was selling, equity funds and fixed income funds, and I personally got it, but it wasn't exactly my mandate to talk about Bitcoin, and serendipitously it is now. But the questions they asked then, and what I've seen 8 years later, is just tremendous growth in the seriousness in which they are choosing to learn and care about this topic, and the intellectual depth of the questions that they're asking versus mostly back then it was how quickly can I find a reason to dismiss this stuff, right? It's just like finding a good excuse to not care. And now they have a really great reason to care, and they want to make sure they're prepared to talk to their clients or their investor community, whoever that might be. So day to day, I represent a suite of exchange traded products that, famously have come to market this year, and the billions of dollars across the industry that goes into that. But I'd say still more commercially at Fidelity, we are, call it very blue chip in the assets that we represent, right? Those on my side of the house are just Bitcoin and Ethereum, more, logistically and technically speaking. And that is one part, of course, where demand has been for the last 4 years since I've drove this business. And then the other part being entirely regulatory. So I think that's part of the challenge here too, where we sit at Fidelity as, being a legacy financial institution, we are balancing innovation with regulatory challenges.
Your perspective, having been in that position for the past 8 years and seen that with the path that we've come down, what do you think has been the biggest hurdle, the biggest challenge in terms of educating everyone that you're talking to?
It's sometimes a chicken and the egg, right? Like depending on who the investor is and how they can invest. If you are a pension fund, right, most of these investment policy mandates don't allow you to go out, at least as their operations are constructed today, and buy spot Bitcoin, Ethereum, Solana, any asset, right? And so why would they put in all the time and effort to learn about these assets if they got to the finish line, wanted to, and still couldn't allocate for more logistical reasons? And the beauty of, traditional investment products and wrappers is you eliminate that friction, that hurdle of getting there. And so now they're willing to lean in and learn, right? And it often starts with Bitcoin because that's just what's been around the longest. And it has the most concrete in terms of technical background that hasn't changed much. It's been very, static in nature by intention. And for them, that's easy, as I describe it, right? They want to start with what's easy and, take bite-sized pieces. And that's not to say they don't have depth to go beyond Bitcoin, but we often recommend start with that, just understand what these networks are at a really high level, how these protocols work more technically, and then we can start to get into other assets.
All right, and I want to come back and sort of talk more about Bitcoin and ETH being the thing, and then everything else, because I think most people in this room, A, on Sol, and B, on the 15,000 other digital assets that exist out there today. So Hadley and Perry, you're both more of in the trenches. You're providing highly valuable services to institutions as they continue on this path and hopefully go beyond just holding Bitcoin and ETH and more. And we're going to talk about the tooling, but you've been in the space for quite some time. Can each of you sort of give me the biggest shift in what you're seeing when it comes to interest levels and depth from your perspective from institutions? Perry, we'll start with you.
Yeah, so I'm Perry. I'm one of the founders of Node 40, and we do financial reporting. So the shift is, it's education.
Have you always been digital asset financial reporting, or did you?
No, so my
stuff?
company started the first staking company in the space in 2015. So very early on, we were doing like the first opportunity to do staking. We jumped on board with that. And we had to develop financial reports for our clients back in 2015. So that's how we got our start. My co-founder and I, software engineers, running servers for staking was frankly boring. Didn't know what the longevity would be for that in 2015. So we got rid of that and focused exclusively on kind of transaction analytics so you could produce financial reports. And as we all know, this really grew. So doing transaction or financial reports for Bitcoin was really easy. So it's easy for people to get into Bitcoin because it's simple value transfer. Like there's an asset moving from one place to another. There's not much more than that. And I think that's part of the appeal. ETH opened the door to things becoming much more complex, where you could have financial vehicles on chain. And so the financial reporting became a little more complex, but it was still easy to wrap your head around because there were traditional analogs you could point to and say, oh, this person's doing borrowing or lending. We're doing some sort of liquidity pools, and that was maybe an education thing that people had to understand what those were. But then along comes Solana, and it's a completely different beast from the way people are interacting with it to how do you report on this. So if you want the institutions to be interested in Solana or some of these more complex chains, they need to abstract away the technology. So they need to fully understand how all of this stuff is working. So I assume there are builders here in the audience. The institutions are looking at you saying, that's interesting. How do we understand this? How do we represent this to our customer base? How do we show that what we're getting involved with has actual value? And so that is, I think, going to be a struggle for institutions just because, one, there's massive volume on Solana. Like we've got clients that are doing 216,000 transactions a day on Solana. So how do you represent that if you want to be a financial company that has longevity, reporting to your shareholders? And it's just a different beast. And also the way you guys are building is very different from all the other platforms. Hadley?
Yeah, I think it's just bringing it up a couple of levels. Like
Hadley, give us a quick context on your background.
Oh, sorry. So Hadley Stern, been in this space since 2014. As Ryan mentioned, I was privileged to be part of the very early team at Fidelity in 2014. I was voluntold, which I think is an institutional corporate term for to start the Bitcoin incubator. And so very early R&D group. And then since then, I've been in the startup space. I was most recently at Bank of New York Mellon, built their digital asset custody business. And now I'm at Marinade, which is a wonderful staking platform, one of the first on Solana, been running 3 years. And it's a staking marketplace. So yeah, bringing it up a couple of levels, like I think it's interesting to think like what we mean when we say institutional and how that plays out. Because like I sometimes wonder, like, what would Satoshi think about institutional panels at crypto conferences? Because that was obviously quite an anti-institutional white paper, right? And so, and then another tick down is when I think about institutional adoption, I think fund products are incredibly important investment vehicles, but I think more of the technology. Like, when will it be a point in an institution on a whiteboard when blockchain will be part of a technical architecture conversation like cloud is now? So I think when we think about institutional adoption, there are so many different layers, which makes it really fun. At Marinade, what appealed to me, I've only been there 3 months, and in doing my due diligence, I dug deeper on Solana because Marinade is a Solana company, and was delighted to see that there were both these things going on with Solana. There's Solana, the asset class, which is very interesting, but there's also this incredible blockchain technology on it that is being adopted by institutions. So I would say Marinade is kind of this, it's a product, it's a financial services product, but I strongly believe that staking and proof-of-stake networks like Solana are going to be part of the underlying infrastructure of how eventually TradFi will validate the transfer of value. That may be a bit meandering. I'm not sure if I answered your question.
No, I think that's helpful. And I think most people in this room would recognize that the tooling's hard, right? I mean, many of us have been, I'm not technical. I'm not a computer scientist. I'm not a developer. I'm not a coder. I sit on a different side of things. But even having been in the space and having a basic understanding, it's still hard, right? There's still super hard concepts to understand, and you have to dive in really deeply. And I think Hadley, when you see it, what do you think institutions are diving in from like the tooling perspective? And are they doing it in broad daylight and sharing what those are? Are they doing it in incubator type programs like the one you had at Fidelity? Or are they just sort of like doing things quietly in the dark to figure out what the hell's going on?
I think a mix. I mean, I'm sure I don't have inside information, but I know there's a lot of people at Fidelity working on, just like we did in 2015 when we sort of were like, well, if we're going to do something with the Bitcoin network, we should probably learn about mining. And maybe instead of reading about mining, we should actually run a small operation, because when you do that. So I think smart companies like Fidelity are doing that. I break our industry into 3 broad categories: TradFi institutions, DeFi degens, and then the Circles and Coinbases of the world, where I don't know if there's a word for them, but they're mature crypto companies that are Circle is a really interesting example, like USDC running multi-chain, billions of dollars of value. It's a real thing. So I actually think they're probably the places where most of that rubber meets the road of innovation between TradFi and DeFi is happening.
And Hadley hits it spot on from how we're looking at it at Fidelity too. Even my group's mandate on a day-to-day basis is, one, most obviously allow investors to get price exposure to these assets in traditional vehicles. That's what we do with every other asset class. But the parallel mandate that we've been working on is tokenization, real-world assets, maybe like an overused terminology there, and what does that mean? But the point being of the technology side of this, in integrating that technology into traditional finance, right? And the beauty of that is it's happening. The not so great part of it, probably for everyone in the room and everyone that's an optimist in the space, is it just takes a really long time to make significant change, and for that significant change to be adopted in meaningful ways. I forget who said it. I was at a conference 3 years ago in New York, and someone said, whatever you think your timeline is with traditional finance, just triple it. And that's just the truth of the matter, to get at least mass adoption at scale. So it's not just Fidelity at this point.
Triple it on the digital asset side.
Yeah, as the two worlds collide, like it's going to just take time for traditional financial companies to either A, get all the way there, or get comfortable enough to commercialize it in some capacity. When we start thinking about technology, especially, that's the harder part, to reassemble 75 years of operational plumbing.
I think even the institutions are dabbling at this point, because what we see is institutions trying to figure out how to put some of these assets to work. So if you think about the ETF issuers, you saw a lot of talk and you saw people filing for staking ETH, right? And why couldn't they do that? Well, aside from the regulators, when we talked to people who were staking ETH and investigating, so they were doing the dabbling, these are the institutions doing the dabbling, they still didn't have comfort that they could report what they were doing, and that's really critical for an institution. And when you, the problem with Solana is it's just so insanely complex that when they would try to do reports on what they were getting involved with, they would be missing data. And that's just the nature of Solana. You can ask one node on Solana, hey, what does this transaction look like? And the node's like, I have no idea, never seen that before. You ask the next node, and the node is like, yeah, I got that, I gotcha. Well, institutions have to understand that there's like lots of hoops that you have to jump through that just don't exist in Bitcoin, they don't exist in ETH, but some of these other layer ones, they are very different. And I think it's gonna take a lot of time for the institutions to finally wrap their heads around that.
From a compliance and audit perspective, are they even realizing how complex that is? Because you're working with them on a data. Okay.
Yeah, no, they don't even realize how complex, because what they're dabbling in is where can I get yield? So that's maybe the first thing you start to look at. What kind of products could I start to develop that will be beneficial to my customer base? And then they'll come to us and say, hey, we did this great thing. Can you help us understand it? Which is a weird approach. Like they're putting the cart before the horse. Can you help us understand the thing that we just did? And that is something very different from the way they've worked in the past. And everything is sort of hidden and obfuscated on the blockchain. So pulling that out and exposing it is going to allow these institutions to be able to move forward faster. And some of the help that we could make as builders is try not to obfuscate things as much and try to be a little bit more straightforward. We've seen this with the likes of, say, Uniswap on ETH. It's very understandable, but some of these programs on Solana are maybe not so understandable.
How mature do you think the infrastructure that institutions will need is right now, and how much further do we have to go? Perry and Hadley, you guys are both providing some of these layers of infrastructure that institutions will need. Like, where are we, and how much more is needed? They don't know it, right? They might not know what they need yet, but I think you have got a unique perspective for what is there and what's coming.
I would say it's nascent, right? I don't think there is any tooling right now that is.
Yeah, I think it depends where on the stack. So, Fidelity is probably the 6th largest holder of Bitcoin right now. So, so on the custody side, in terms of key wallet infrastructure, key generation, key security, basic wallet functionality, albeit Bitcoin is, not Solana, right? So that some parts of the stack, and then the other part, the compliance stack with people like Chainalysis, et cetera, there is maturity. But to Perry's point, once you kind of get into the software functionality, or, this idea that Ethereum started like a blockchain as a compute layer, that's when things start to fall apart very quickly. So that's where I think there's tremendous opportunity for what Perry and others are doing as this becomes more broadly adopted for real institutional tooling.
Well, even think about the regulators. So we had the ETFs, and most of them were custodying in one place, right?
Yeah.
And the rule said you could only have X number of Bitcoin or X number of value in each wallet. Well, that's a weird thing. There's no reason to have that limit on somebody. So now they're having to jump through hoops just because the regulators didn't understand. So maybe the institutions finally understood, but then you bump into the regulatory's lack of understanding of what's going on.
Ryan, you've been here for a while. Do you think that the levels of support that are needed so that institutions can handle all of these, are they external? Are they internal? Are institutions ever going to build them on their own, or are they going to have to rely on sort of third-party providers that have been playing around the space for probably a decade by the time they get to it?
Yeah, it certainly varies, right? I think Fidelity is almost the exception to the rule as a legacy firm, building it all yourself where you can. Even the BlackRocks, right, have partnered strategically or bought where it makes sense. And there's nothing wrong with that if that's within your economic mindset of how to run the business and choosing, the best partners that you can find. And that does accelerate timelines. So I think that's a good thing. There's a lot of high quality companies, to Hadley's point, I don't know how we categorize them in the space, that can serve as these service providers. It's about the willingness to ultimately commercialize. I think you'd be hard pressed to find a legacy institution that isn't at least exploring this stuff in some capacity now. And many have started to commercialize, or at least test and learn in a commercial way, with some tokenized products more recently on the money market side is primarily what I would be referring to there. But beyond that, I'd say where it happens is, one part service is needed, and does that ecosystem exist? And then there's somewhat of this just like Lindy effect of, they gravitate towards, say, an Ethereum because it's been around 9 years, and to them that is no time whatsoever, right? 2015 is nothing in the scheme of traditional finance, let alone 15 of Bitcoin, or 4 or 5 for Solana. So I think Solana, though, does have this mind share, especially right now, that it maybe even didn't 4 years ago when I started this role, and it was very new, of course, where at Fidelity we would get this ask, right, of internally we'd have these discussions, what is being asked about, right? It's Bitcoin, it's the largest. Ethereum's the second largest, makes natural sense. And then what's after that? And there was always a third ask, usually, depending on the investor, but it just varied so much conversation to conversation about what they cared about. And, boots on the ground sentiment of like what I've heard this year in different types of conversations is that third, more often than not, has turned into a Solana conversation. And so the mind share is certainly there of like, what is the next asset, even on an institutional level or an intermediary level, that people care about. And then it is through two different lenses, like where, depending on what that convo is it a pure price allocation and appreciation investment opportunity, or are they talking from the technology side and building on the network itself. And both of those can be independently good things, but it just depends on who is that institution. We use that word broadly, right? Yeah.
Wait, we're going to switch to something else because this was not enough time for this fun panel. Marinade, Hadley was completely bootstrapped, has over $1 billion of TVL now. You're focused on self-service retail. You're moving more to the institution side of things. The right infrastructure is human and technical. Diligence, risk management, compliance is all part of that. How do you see institutions thinking about the risk and compliance part of it?
Yeah, great question. And I was going to follow on with, staking is now obviously a huge component of that conversation for investors with Ethereum, but also with Solana, where the rewards right now are in the 7 to 8% range. So yeah, it's Marinade was bootstrapped. I had nothing to do with its origin story. So the team is amazing. Based in Prague 3 years ago, Solana Hackathon. And they created this, Marinade doesn't run any validators ourselves. So when you stake with Marinade, we take your sol, sort of automatically distribute it to hundreds of validators in real time. And then we have the stake auction marketplace mechanism. And $1.25 billion TVL, depending on the price, largely retail. And there was demand from institutions to be able to stake. The problem with LSTs, which was the original Marinade, is that a token is really not good for institutions. And Solana, unlike Ethereum, has the mechanism to do native staking. So we released something called the Marinade Native, and are now targeting the institutional market and having success. When I talk to institutions, and it's particularly in the US, there are 3 concerns in order: regulatory, security, and then it's what's the reward? What can I earn on it? So we've kicked off a legal sprint to determine and confirm our regulatory status, going through a SOC 2, which is fascinating for a DeFi team to go through a SOC 2, and it's an interesting cultural experience. But those are the things we have to do in order to meet particularly the US institutional buying market right now.
I think that's funny because the builders are completely the opposite, right? It's what's the yield first, right? And then we'll back into all the other things we need in order to maybe onboard clients, which could be institutions or whales or other retail users.
All right, we're coming up on time here, and we're going to keep this program on schedule. We've managed to keep politics out of this conversation, which has been super fun. But we're going to come up to our conversation with Mr. Gus Coldebella and John Deaton. And so hot takes only as we close out and go down the panel line here. What's the biggest opportunity with a political change that we're seeing, no matter what happens in however many days we have to go? There's a change and there's a shift. No matter who wins and what the outcomes are, there's a change. What will have the biggest impact on institutions with a change in the political regime here?
It's value. There's value here. So if there's value, the politicians are going to follow that value. And that's it. So it doesn't matter which party is going to win. We are already at a stage where there's no way to stop this. And as long as there's value, the politicians are going to find a way to insert themselves, rightly or wrongly, whether or not they're on your side or not. They are going to find a way to work with you. So let's make this something that they can't ignore.
Yeah, I would call the next 3 weeks, no matter what happens, noise, right, in the system, in that this is really long-term, and it has been long-term. It will continue to be long-term, in that it's bigger than the top of the ticket as well. It's very localized in different states, Senate, House, et cetera. So, how this goes at this point is it's not going away. That wasn't always the case, 3, 5, 10 years ago, but it's changed. And the beauty of just where we've sat at Fidelity has been able to engage with these legislators and regulators over time. And what they want is they want to learn. So I think it's not a hot take, but if anything else, it's that this matters. And if we can all leave here with confidence that this matters, that's probably the best thing for the industry.
Yeah, I guess I'll close it out. I think us as an industry desperate for sensible regulation, not through enforcement action. The Bitcoin ETF got approved because of a lawsuit by Grayscale, ultimately, right, against the SEC. This sort of enforced regulation creation or through enforcement action has to stop. I'm optimistic. I think Mark Andreessen said software will eat the world. So blockchain is here. It's an unstoppable force. I think the question is how much will the U.S. participate in it? And will we be those leaders like SpaceX, that incredible rocket going up and down, or is that going to happen in another country? Because it's going to happen.
All right, Perry, Ryan, Hadley, thank you so much. I think that you guys will be around a little bit. I'm sorry we didn't get to cover. I talked too fast, and I don't think we still talked fast enough. So if you want to meet up with any of these guys, I think they'll be around for a little bit, but thank you for being here. And I will pass this. We'll tie this off, and keeping things efficient, Gus and Mr. John Deaton.